I'm Jade McNeil and welcome to the Beespace Podcast, your bi-weekly dose of business and property realness. No hype, no fluff, and definitely no BS. Just honest conversations about what it really takes to build something from nothing. Hello and welcome back to the Beespace Podcast. So today I am joined with a good friend of mine, Sam. Hello.
Hello, Jade. How are you today?
Yes, I'm very good. Thank you for joining me on my podcast. So Saam Lowni, today we're going to have a conversation in and around some fun stuff, some market condition stuff, which I know, you like these type of subjects. And I thought that you would be the perfect person to come onto my podcast and we can talk through some of the changes that have gone on in the UK this year. It's been a bit brutal for various reasons and how it may affect somebody that is, well, two types of people maybe. Somebody like myself who's an existing portfolio owner and how that's going to affect me and what I should be considering moving forward. And also someone that might be thinking, you know what, I'm going to go into property, but there's a lot going on. Is it the right time to go into it? But before we jump into all of that, will you please just introduce yourself? Tell me a little bit about you, about what you do and about your business.
Yes, great to be here. And my property career started in 2001. I started as an estate agent in Northeast London. And since then, I've become an investor, developer, landlord. I've grown a property portfolio across North and East London, Kent, the West Midlands, and up in the Northeast as well. And I now live on the South Coast. Actually, this year I just bought a property on the South Coast, and it's one of the first ones that I've lived in. Usually I buy where other people can afford to rent and then rent where I live. But this one, since I've started a family 3 years ago, I've got a young daughter, bought something and refurbished it, of course, and now happily living in it. In the meantime, I've also been a founding member of a lending business. We built a fund from 0 to 300 million. It was development finance. We were doing ticket sizes between 3 to 30 million. And in 2021, I set up my own finance brokerage. So going back to the days of being an estate agent, being the middle person and brokering deals, that's where I feel most comfortable. That's what I enjoy the most. I saw that there was a need in the market for SME property investors and developers across the country for them to have a passionate and experienced property finance broker. I just saw the lack of it. Having been a lender, I saw the applications that were coming in, people asking for 3, 4, 5, 10 million pounds plus. And the quality of the applications was so poor that I could just see that there was a gap in the market. And since then, Merryoaks Property Finance has been growing. We've got some great clients. We're doing stuff up and down the country, everything from bridging, development, commercial term loans, VAT bridging, buy-to-lets, HMOs, the whole 9 yards, anything property finance related. And I genuinely enjoy all of it. I wish there was more time in the day.
And full transparency, you're my broker as well.
Yes, exactly. I only work with the best people.
Oh, of course, of course. And I think this year, we're set to do about 2 million worth of finance through you by the end of the year if everything gets over the line for when we're hoping. So that's really positive. So thank you for all of that. So yeah, so you are what I would deem as a numbers guy. You kind of got your ear to the ground in terms of what's going on. The lenders, because you speak to them constantly. That's your world. I guess it would be fair to say that you are, on the front line of how they're feeling, what they're thinking, how they're reacting to things, changes that they're bringing in, and so on and so forth. So we've had. I don't know, actually, Sam. I think this year has been tricky as a being a landlord lady. But don't you think from 2020, from COVID, like, oh God, it's been brutal, hasn't it, to own buildings and businesses and stuff?
I'll be honest with you. In my opinion, it's been pretty brutal since 2015. Okay. Ever since George Osborne changed the rules for the Section 24 being taxed on your revenue and not your profit. So for having properties in your personal name, and that's the one that everyone talks about the most. Even abolishing the wear and tear allowance, these little things that are deteriorating the landlord's profitability, step by step, one thing after another, has just led to where we are today, where it's getting beyond painful, and more people are trying to leave the market, and supply is falling. Rents are shooting up, which for those people in the market that are kind of hanging on tight, That's only a good thing. But at the same time, their costs are going up. Interest rates have just gone up over the last 18, 24 months through inflation, inflationary measures. So it's a really, really painful time. And there's only more pain coming as well with the new.
Oh, people will be tuning out like, can't listen to that. It's too depressing.
Yeah, I mean, so there's the philosophies with this as well. So am I the landlord that's going to be selling up? No. So as much as there's pain, there's no gain without some pain. And the mindset for me has always been that property is a marathon, not a sprint, and you need to be in it for the long run. So if you're trying to make money overnight, it probably isn't the right game anyway. There are traders, there are people that trade property. There are people that try and do little flips here and there, and it does work and it does kind of generate cash. Or larger scale developments. They'll buy and sell, they'll do 18, 24 month projects, or they'll take something through planning and then flip it. And that can take some time, but they do still make good money. But for me, property has always been a marathon, not a sprint, especially if you're going to buy and hold. You're not going to be making money overnight. And you've got to be able to take a 10 to 20 year horizon view to be able to really reap the rewards. We live on an island where the supply does outweigh, the demand does outweigh supply. And if you can hang on long enough through the peaks and troughs, the boom bust cycles, which are an inevitable part of any capitalist economy, you will eventually be able to reap the rewards. Right now, we're just going through a pretty major squeeze. Landlords have had it pretty good from about 1995, 97 through to about 2015. They've had a pretty good run of having finance, like the Mortgage Express people that were doing refinances and 100% mortgages through the kind of early 2000s. And just even the changes to the tenancy rules, which are kind of reverting back to what they were back in the 70s, etc. All of that was designed to create a bigger private sector for landlords, and it worked. It really worked, and there's a lot of gains to be had over that period of time, and it's just swinging back the other way. Sometimes there's an overcorrection, which is what I think we're going through right now, but eventually it will swing back the other way, and whoever can. It's not the timing of the market, it's the time in the market. That's another principle that I always kind of live by. So if you can just hang on that little bit longer, I think the good times are around the corner. And when I say around the corner, it's not going to be 2025 or anything like that. It will be in the foreseeable future, let's say up to 2030. But again, property is a marathon, not a sprint. So as long as you have that mindset by the time you, when you get into it, and it's something else that we've been talking about and I've been thinking a lot about, is to have multiple streams of income, multiple streams of business income. If you can do that, then the way that I look at my property portfolio, it's a pension pot.
Yeah, absolutely. Yeah.
Long term. And if I've got short term gains, great. If it goes up in value and I can pull a little bit of cash out and compound the portfolio, great. If not, as long as it washes its own face, as long as it keeps its head above water, as long as it makes a nice little profit at the end of every year to make sure that I can keep up with my interest payments, as long as I can keep up with my maintenance, over the next 5-10 years, I just have the faith and that it will go up in value. And if it will go up in value, it'll probably be, in terms of risk reward and the amount of effort that I have to put in, it'll still be one of the best asset classes on offer.
So I'm totally with you there as well. We definitely look at our portfolio of all the HMO stuff and think pension long term. That's where it's at. I mean, my personal experience of the HMOs, particularly the smaller ones over the past couple of years, it's been really hard to make any degree of any profit because, you know, let's say you might get a void in a professional let or a gap in turnover. You might get an issue on one of the student contracts and then the boiler breaks and then something leaks. And then you put all of that together and actually you've not made anything that year. It became really apparent to us last year that particularly with the smaller stock, we had to go, okay, yeah, but we've got a fair amount of equity in those buildings. So the long-term play feels nice, you know, but luckily we're in a position where we've got really strong operational businesses that we, you know, can see the cash flow coming in and we can dial up, dial down, do what we've got. It gives us flexibility and it gives us comfort, but then we've also got the portfolio in the background. So that's definitely a mindset shift that we've had in the past 2 years to say this is about long-term equity build. So with that then, if somebody's going into it, you know, because in our industry, and I don't want to go on to my, you know, soapbox about this conversation because I speak about it enough as it is, but it's sold to everyone online. Okay, do one deal, leave corporate role, sail off on your yacht, whatever. That's not real, is it? That's not the times we live in at all.
No.
Like what is realistic and what should somebody be considering for that first investment? What are the kind of key factors that are just like non-negotiable for you?
Well, it depends on where they're coming from. If we're talking about property specifically, so let's assume they've got a job that's paying them okay, but they're not 100% happy, or they've got a business that's done quite well, and they're now looking to diversify and put some funds into property. Where's a good starting point? It's I think you've got to look at the environment around you, and to see what's going to be your competitive edge. So, for example, one of the reasons why I think some developers do better than others is because they might be an architect professionally, they might be a contractor, professionally, they might be a planning consultant. I think these are the three strongest professions and knowledge bases that you need to have to become a really, really good developer to be competitive in the market. So if you're coming from that kind of background, then maybe getting into development and doing small flips and then starting small, thinking big and scaling up, maybe doing some backland sites and then going into great gray belt areas or looking at PD, depending on what your skill set is. If you're coming from, let's say, you're a school teacher or you're an IT or you're something completely abstract that's not been in property at all, I think that you should consider, again, it's always start small, think big. You got to think about how much time do you want to put into this stuff? Do you want to be a buy and hold person or buy and sell? I think that's also an important factor to consider. And that can also be largely driven by where you are geographically in the country. So if you're, for example, in the north of England, where the yields are really, really good, and I'm talking about the northeast where I grew up, northwest, the valleys in Wales, these places historically have got fantastic yields. I would consider buying and holding. I'd be considering still buying whole, rent, refurbish, refinance, looking at what's the best way I can get a good yield. Now, if you asked me to do this back in 2001, 2002, a straightforward buy to let would have been good enough. Bed sits and HMOs weren't really even a thing by then. If between 2010 and 2020, HMOs have been really, really good. And I still think that they're very, very good. It's just about what's the end client customer that you're providing that accommodation for. Is it going to be students? Is it going to be professionals? Or what's become more and more popular recently is the social housing side of things. I've got a property that's in the West Midlands in Coventry. I finished it last year. It was a two bedroom flats. I created 2 4-bedroom flats out of it. So increased from 4 to 8 bedrooms, all ensuited, all looking fancy. The student market in that area has really suffered because the students haven't been coming back since COVID, because they changed the laws on visas for foreign students to bring dependents with them. The demand has fallen off a cliff. So whatever was working for me pre-2020 in the HMO market, I've had to slightly tweak. I went into the professional market or the short let market or the social housing market. So I've got to decide now, if I'm going to do HMOs, which one is going to be the best for me in the area that I'm operating. So if you're in the north, high yielding income producing assets, HMOs, depending on what kind of client base you're focused on. And that will again largely be driven on which town or city you're operating in. So if you come from Durham City, where I am, student market's always strong. It's one of the best universities in the country. But if you're doing it in Bolton or Blackburn, maybe they don't have a strong student community. So you might have to go down the professional or social housing route. So again, these are the driving factors. Then it's okay, if you're in the north, are you going to do something locally because you're based in the north, or do you want to suddenly go and travel across the country to go to the bright lights of London where the GDV per square foot is a lot higher and you start looking at flip deals? And it's a bit of a minefield to decide where to go. And I think it largely is driven by and it's a fact-finding exercise that you need to talk somebody through all of these pros and cons. And I'll finish it very quickly on a guy that actually did all my flooring in my house that I've just refurbished. He's had a flooring business for 20 years. And through COVID, he suffered a little bit and thought, you know what, I've had enough of this. I've been doing the same thing for such a long time. I'm just going to sell up. I'm going to take the money and I'm going to start flipping houses in Southampton on the south coast, which is where he lives. And in doing so, I mean, he's a phenomenal guy, this guy, Richard. He can literally build a whole house with his bare hand. He's such a handy guy. he was thinking he's got all this capital that he's sitting on. Do I go up north and do the high yielding stuff, or do I do stuff locally? And I had a long chat with him. And I spoke about the pros and cons about going up north and traveling and this, that, and the other. And he literally came and saw me this morning and he said, I've decided I'm actually going to just stay local. I don't want to do the traveling. As much as I love the idea of the pension fund and the income producing and the high yield, and I can just sit and live off the rental income, realistically for me, I'm just not going to be able to do the traveling. I'm 52 years old right now. And so I'm just going to have to keep flipping houses because the yields are not as good in my area, but I know that I can find loads of really good little bungalows, which is what he's been doing recently. I can add some value, add an extra floor. I can keep the build cost down, and I can create really desirable homes in family areas. And that's going to be my thing. So it really boils down. There's so many different things you still can do. It just depends on where you're at.
Yeah, definitely. And I love that story about your floor fitter as well. And he's spot on. Bungalow flips, if you can get them in the right area, are like unicorns. You know, and it's something we've always got one eye on in our areas because we're focusing on flips for the next couple of years, as you know. And it's those kind of like, you know, small, affluent, not small, like, you know, kind of affordable in affluent areas, like, you know, first time buyers, second family homes, so on and so forth. And bungalows as well, because, you know, they tend to be bought with cash. And the lion's share of them are not particularly nicely designed, but the ones that you do well sell really fast. So he's got a really good niche. So my thing, and I'm repeating myself all the time on this, is location. So like if we're going into the whatever strategy we choose to do, if we go into it and we buy in the right location, just the location alone over 10, 15, 20 year period will give us growth. If we're in locations that don't improve, we're not going to get that equity growth, are we? So like, it's kind of like you're going to always be protected long-term by the location that you're in, regardless of the strategy that you're doing. So I think that's kind of my one non-negotiable for somebody. And then it's like getting into the nuances of, you know, what strategy do you do and why do you do it? So like on the HMO stuff at the minute, because obviously that's my world. Don't get me wrong, like if I could find 10, you know, C3 to C4, 6 beds that I could develop out in Article 4 in knots, I'd do them. But it's like finding a needle in a haystack. You know, they're so hard. And the last one that we're just wrapping it up on, that's took me, I don't know, 2 years, 3 years from start to finish because of planning. And that is quite grueling, you know, to be in that process, but absolutely worth it when you get to the other side because the cash flow is good on that one.
And this is my thing is that if somebody was getting into it right now, and you know, the people that were investing in the 90s are saying, oh, you know, it was so hard in the 2000s relatively. And the people that are investing in the 2000s saying it's the 2010s. I remember being an estate agent in 2015 and sitting in the office where somebody was saying, oh, when my parents bought the properties, it was so much better. And I went out and did a whole bunch of deals and made a good bunch of money out of it. So it's always easy to say that it was easier then. And it arguably was as well, but it doesn't mean that it's impossible and it doesn't mean it's not worth doing. And I think that's the bottom line, is that if somebody's sold a business and sitting on some cash or inherited some money or something, property is still a fantastic asset class. It just might mean that the ones that have been doing it for the last 10 years may not have the same appetite because they've just been going through that. So it's not all new to them. They've had some expectations, they've had some returns, and they might be turning their head somewhere else. But anybody starting now, the best time to plant a tree was, 20 years ago. The second best still today. So absolutely, you should just find out what is going to work for you, what's going to work best. And the way to do it is risk, reward, and effort. Think on those terms and speak to people that are experienced, that they can open your mind, ask you certain questions that you'll eventually, like we did with Richard, he'll come to the conclusion on his own as to what's going to work best for him.
So let's talk about the kind of like big changes this summer. So obviously Labour government came in.
Yeah.
How did that rock your world?
I grew up in the Northeast where everybody votes Labour, and I was a Labour guy when things can only get better in the 97 with Tony Blair and all that sort of stuff. So I've always been Labour at heart, even though as I've got older, I want to pay less taxes and I've kind of gone more right wing with my economic policy at the very least, even though I always struggled to ever vote Tory because of my upbringing. I actually went and had a pint with Stephen Morgan, the MP, the local MP here, to discuss the regeneration of the town centres. We were a little bit dilapidated in Southsea and Portsmouth, which is where I'm residing for the last couple of years. And also what they can do for small businesses, what they can do for small SME businesses, because that is really the backbone. Yes, corporates are fantastic and they bring a lot of tax revenue and employment for a lot of people across the country. And it's always a positive thing if they're in any economy. But SMEs are really, really the backbone. It's like having a business where 50% of all your revenue comes from one client. It's a dangerous place to be. You want to have loads and loads and loads of profitable small businesses that are employing people. So what are they doing? And he gave me a whole bunch of like billions are going here and billions are going there and billions. I was like, well, how many of those billions are coming to me? And like, what am I seeing? What's tangible here to help me grow my business? Which I didn't get a really, really positive answer, which was a bit disappointing. But I'm staying close to him and his team, and I'm just continuing the conversation. They invited us to kind of a wine tasting thing on a Friday evening. So I'll continue that conversation. He said, I'll introduce you to the business department team MP guy. I'm not 100% hopeful that all their plans are going to be that fruitful, if I'm honest. But again, does that mean that I'm going to sell up and go to Dubai? No, I'm not going to go to Monte Carlo. I'm not going to go and the grass is always greener on the other side type thing. I've actually tried that in my life. I've lived in Spain. I've lived in Hong Kong for 5 years, and these are fantastic places. But the reality is that there are pros and cons wherever you go. And in my opinion, as I've grown older, I'd like to think that the few of the gray hairs have given me some wisdom. And the reality is the grass is greener wherever you water it. The UK is still one of the best places in terms of low levels of relative corruption, fairness in the legal system, diversity in the working population, and just huge potential and huge opportunity wherever you are, whether you're in the northeast, northwest, southeast, southwest, whether you're in Wales, Scotland, Northern Ireland. This is still one of the best places to invest. We're just going through a squeeze right now. So in that peak, going back to what I was saying earlier, in that boom bust cycle, we're just going through a type of a bust cycle where there's an absolute squeeze. And these were happening in the late 70s with the 3 and 4 day weeks, with the miners' strikes, the bin strikes. All of this stuff was kind of happening in some way, shape, or form. And it makes sense. Eventually, what will happen is the pendulum will swing the other way. There'll be deregulation, which is what you're already seeing in the US as well. There's deregulation. They've just voted in Donald Trump, and the idea is that they've got this.
Talk about that.
Yeah, and that's what we're seeing here. We're just a little bit behind the curve, and ours will probably happen in the next, I'm going to say, 4 to 10 years, depending on other, variety of other macroeconomic factors that can sway things. But yeah, I think that Labour overall, they've got some good policies, that they want to reignite and redo the planning system, which it really does need. But the fact is the previous government had about 13 different housing ministers in 13 years, a revolving door of people that don't know what they're doing. They've got no experience.
Not continuity.
The whole of the Labour cabinet has never worked a day in their life. So they're going to be the party for business, but none of them actually run a business or worked in a business. They're all, career politicians. So it's just difficult to get really any faith on whether they are going to be able to make a difference. And then the hammering of the landlords,
Yeah.
I think if everyone was thinking that there's a final nail in the coffin, they always find one more nail to hammer in.
This episode of the Beespace Podcast is kindly sponsored by the wonderful people at Landlord Furniture Co. Specialising in a huge range of high-quality bespoke furniture, Landlord Furniture Co. provides durable pieces designed to last in your rental properties. If you're searching for the perfect furniture to attract professional HMO tenants, or need more resilient pieces for your student accommodations, considering cost-effective furniture packs for a larger property, or looking for something more personalised to elevate your serviced accommodation brand, whatever your need, Landlord Furniture Co. will craft a solution for you. You can say goodbye to rubbish old flat packs and start investing in a luxurious experience for your tenants. Backed by a 3-year warranty and exceptional customer service, they really are the smart choice for any landlord or property developer out there who takes their properties, their tenants and their business seriously. So ready to transform your spaces with Landlord Furniture Co. and ensure that your investments stand out in the market? Visit Landlord Furniture Co. today at www.landlordfurnitureco.co.uk, or you can head to their showroom, which is in Oldham, or find them over on Instagram at Landlord Furniture Co. Now, let's get back to the episode. when the budget came out, we were on holiday in Centre Parks, and I just read it, and I was just like, oh.
Yeah, we've got a mutual buddy, Craig, Craig, the property apprentice, and he's been on an absolute rampage trying to get the NRLA to really step up and to look after landlord rights, and they're just not doing it. We're not getting the support, and we continuously demonized for the phenomenal products that 99% of the landlords are creating these days. For the odd rogue landlord that you'll hear about on some TV show or something, which is even getting rarer and rarer. A lot of regulation has come in to stop all of that sort of thing. I just think that the pendulum will swing the other way, because what's going to happen is more and more regulations will happen. More and more landlords will sell. Rent controls are probably around the corner. I wouldn't be surprised if that came out. All that means is our margins get squeezed. We'll be less likely and less willing, less able to do maintenance on a property, because we just don't have the profit to do it. So either we'll sell up again, or we'll have substandard property, rental property on the market. All of this will cause a little bit of an uproar for voters eventually, and the deregulation will happen. Private landlords will be invited back into the economy to help out. So it's just about surviving until that happens. And if you've structured your portfolio correctly, or your property business correctly, I think you can weather these storms. I think especially for buy and hold, if you've got high yielding stuff, like buy to lets have really suffered a lot, and you just means you have to put more cash in the deal. Again, some people say buy to let's dead. It's not dead. It's just you can't get 75% LTV. You might have to get 60% LTV to make it work. And your returns, instead of being like 4-5%, they might be 3-4%. Inflation is back down to 1.7%. So you're still actually making a net return each year. And on top of that, over the next 10 years, hopefully the property, or the next 20 years, the property will double in value or go up 50% in value. So it's still, relative to your risk, reward, and effort, it's a good asset class. So there's loads of positives still, but you just have to, weather some of the downside, which is inevitable. There'll always be something.
That's interesting about the loan to values on buy to lets. I didn't realise that had kind of affected that market that much. Because I know, obviously, for us on the HMO stuff, well, there's always a dream of 75% loan to value, but the reality is very different. But I thought buy to lets were kind of like a bit more, sticky in that regard, but they're even lower in that.
So it's because of the interest coverage ratio, the rental income, especially in London and the Southeast, where the yields are really, really tight already. They're always around 3 to 4, maybe touching 5% for some ex-local authority stuff. They've crept up ever so slightly, but because the interest rates at the Bank of England are kind of 5.25 now at 4.75, and the arrangement fees are quite still chunky at 5% and that sort of thing, the interest coverage ratio means that the rental income that you're getting is not enough to be able to cover, and not like 125 times the interest. So all that means is they look at it and they say, right, we like this property. Instead of lending you 75% LTV, they will lend you 60 or 65%. So you just have to leave more cash in the deal. That squeezes your overall return on your capital employed. But in the grand scheme of things, in terms of risk, reward, effort, single lets are relatively low risk properties. Easy to manage. So if you've got a lot of cash that you're sitting on, and a lot of wealthy people do have a lot of cash that they're sitting on, and they want something that's just going to tick over nicely, you typically have two choices. You can either put it into the FTSE 100 or an index fund, and the capital value of stocks and shares from Tesla and Apple and Microsoft will eventually go up a little bit, and you get the dividends that come out. Or you can put it into a property in and around London or the southeast of England, and it should hold its value fairly well, So it's none of this stuff's dead. It's just about what's right for you. And
definitely.
Yeah.
Okay. So some pretty big changes coming in on the rental market for next year for landlords in 2025. How do you think that's going to kind of affect everybody? What do you think the reaction from portfolio owners is going to be?
There's a fascinating statistic that the number of landlords that actually own more than one property, I can't remember off the top of my head, and I don't want to say the wrong number, but it is a crazy number that there's a very small percentage of landlords that actually own. There are portfolio landlords that will actually tick that box. I think for the ones that own one property here or there, you might see more of those sell up because
Yeah.
they're getting squeezed on their rental income. They're getting taxed on that. So some people will be making a loss every year, and then they're getting hammered with more taxes on top. That's been happening actually. You can see a gradual increase in rental stock coming to the market over the last 5 years, ever since George Osborne changed that. I think with more of the I talk about Craig again, the fixed term contracts. Yeah,
Mm-hmm.
and there's pros and cons with it all. The fixed term contracts, the abolishment of that is going to affect student landlords the most, especially.
Yeah.
And the hypocrisy is that they're letting the student blocks and the corporate kind of companies get away with it, whereas the private landlords are not going to be able to get away with it. Then on top of all of that, you've got the what's the other thing?
We've got the renters reform, haven't we? Which is what's coming in next year. And yeah, you're right. That's coming for as student landlord portfolio owners. So the increases on budget that we've seen. Yeah, I mean, it's going to not be a particularly nice time. I think, obviously, I've got my own lettings arm to Beespace as well. So we're already kind of having that internal conversation of how are we going to get around this one then when one of them wants to leave off the AST? So, yeah, it's going to be a tricky old time, I believe. I think for us at the moment, one of our saving graces, I guess, is flexibility within the business, where if I needed to turn a house into something else quite quickly, I could do that from an operational point of view to make revenue, then I would be able to do that. But I do think that this is like we're stepping into the unknown. I think it's going to cause a lot of problems. The other thing, actually, which you might be able to answer me this on, is how will lenders value? Because at the moment on the student stuff that anyone creates, they're looking at that yield, which is obviously for valuation, which is obviously given over for us. We're on a 52-week contract for the student stock. If they can only guarantee 6 months, how are my buildings being valued? Is it a 6-month valuation, or will they take a 52-week? What do you think will happen from the lender's point of view?
The honest answer is I don't know just yet, because
Okay.
the still hasn't all been crystallized, and people are talking about it, and I think there's still some pushback on how it's going to all work out. I mean, the thing that I was trying to remember before was the no fault evictions.
Oh yeah, yeah.
Which is a little bit crazy, because I don't think any landlord that's got a good tenant would be getting rid of them just for the sake of it anyway. It's just like it doesn't even really make too much sense. I've got a tenant that's been in a property for just over 5 years, and the only reason why she's decided to move out is because we've had to put up the rent. We were on a 5-year fixed mortgage.
Mm.
I can imagine we had a really good rate. That's gone nearly double of what we were paying before, and we've had to put up the rent just to cover some of that loss. And unfortunately, she can't afford it. So it's with a heavy heart. She wrote a really lovely email saying, "You've always been really supportive. We really appreciate it, but we just can't do it anymore." So she's handing in a notice for that. Otherwise, why would we get rid of somebody that's going to be paying our rent and our mortgage and our income for the next 10, 15 years? It doesn't make sense to do that. So that's the other thing that I didn't like about the Landlords Reform Act. And when we'll just go back to your question, I'm not 100% sure how all of that's going to unfold right now. I still need to do a little bit more research into it. It's all still pretty raw. And I know that there's still a lot of pushback before it becomes actual law, this stuff. It's still in that kind of early proposal stage, because it was going to be all done via the Tories, but it all got put on hold. And now all that Labour have done is kind of rejuvenated it, only with some minor tweaks, but it's pretty much the same thing all over again. So I think that there will be, for students, for private landlords, I think that they will change it so that they allow them to have full 11, 12 months, if you can prove that they're a student, in the same way that you don't pay council tax if you've got students in. There'll be some sort of exemption if they can show that they're in university, and you can have that specific type of contract. That's what I think will happen. But otherwise, the power is going back to the tenants, and I think I'm kind of okay with it. Again, I think it's a cost to the business, and I think that's the way you've got to look at it. I think people made property work before, when things were like this, before it was all changed and reformed through the 80s, and I think we'll make it work again. I think it'll be fine. I think as long as you create good quality accommodation, that's reasonably priced, I think you'll find people that want to live there. Not everybody wants to buy a house. Not everybody, and if some people want to be socially mobile, especially in this day and age where you've got the gig economy, everything's online. People, people will live there as long as they need to, and 6-month contracts are a thing as well. You just they might move move out after 3 months. The market will adapt, and new opportunities and new ways of doing things will evolve. It's just the way it always goes.
Yeah. And even now with the student stuff, you're going to get a proportion of problems even now, even with the current tenancies that are in. We've got things going on that we're still resolving. It's not always straightforward regardless. So there's always people have problems, right? Shit happens to everyone. So it's like it's there anyway. It's how you navigate through.
Exactly. It's the classic one for students as well. Even with the 11 months, there's this portion that always try and get out a little bit earlier. Oh, we don't need it for the last month because we're going home a little bit sooner. We don't want to pay the 11th month. It's like, no, you've signed up to a contract. So there's always going to be something there that, and that's what business is all about. Business is about solving problems.
Oh, yeah, absolutely. Amen to that. Okay, so final thing I would just want to kind of go over, because I'm interested to get your thoughts on this. Obviously, America.
Yes.
God, America. So glad I'm not American. Obviously, they've elected President Trump into government. I don't know why, but they have for next year. So how do you think that is going to affect us?
Interestingly, about President Trump, second time elected,
criminal convictions.
Criminal conviction. He's a womanizer. He's convicted rapist. He's basically
lovely.
It is a little bit crazy. However, this is the funny thing that I'm a little bit not conflicted, but I'm torn. I'm definitely torn.
Okay.
Because in 2016, I was certainly consuming a load of media that was painting him to be this really, really thick and uncouth kind of character that was only self-interested and all that sort of stuff. Now, I'm not saying that that's changed massively over the last 8 years or so, but it's certainly, my mindset has shifted. And I do think that having somebody with a business mindset in office, actually, I'm curious to see what will happen, because actually in his last tenure, the economy did do pretty well. Some people could say that, oh, that's off the back of Barack Obama's policies for 8 years. Some people could say actually some of the tax cuts that he did and some of the policies that he created actually helped really galvanize and boost it to the next level. So and then there was no wars as well that he started, which I think, from like just being a humanist, I just don't understand how a lot of these politicians, whichever country you come from, whichever background, can declare war or start war on other people, and they don't sit down and do loads of diplomacy. So from that point of view, I kind of like the guy, and I kind of think, you know what, maybe we just need a refreshing change. I do follow US and UK politics quite a lot, and I was watching the rallies that the opposition, Kamala Harris, the Democrat candidate. And, it's all scripted. So you see the different screens. She goes to different rallies. She says literally the same thing. And it's this whole unison thing. And it just seems so contrived and so done. And we're done with that. We want somebody to shoot from the hip a little bit. We want somebody to speak their mind. We want somebody that understands what the people want, which is a better economy, a safer economy, and all those sorts of things. And then from my point of view, somebody that really understands business, because business is the backbone of any growth in any economy, in my opinion. So you look at the communist, socialist type governments, and you look at in the past, and the capitalist ones. Capitalism generally has created more wealth historically than any other system. So there's got to be a limit. There's got to be a balance. Too much of one or extreme of either is never a good thing. But I think we've had in the US, I think they've had something like 4 years out of 16 have been right-wing kind of economic policy with lower taxes. Everything else has been left-wing. So building bigger governments, building like all of our tax dollars going into more and more departments for this, that, and the other. And it's just a lot of waste. You see what's happened in Argentina. They've started to demolish loads of those government departments to try and create a budget surplus, which they've finally done for the first time in I don't know how many decades. In America, they've got Vivek Ramaswamy and Elon Musk now that's started this DOGE, which is a Department of Government. I've forgotten the exact name of it, but effectively they're going to look at all the government departments and remove the ones that are not needed to lower that spending. It's what we need here in this country as well now. Like I said, the pendulum swings this way and that way. We've had so many years of Labour, so many years of Tories. In the US, you've got so many years of Democrats and so many years of Republicans. Right now, the US and the UK and the West in general, I think, needs a little bit more right-wing economic policy to let business people get on, find opportunities, employ people, and raise people out of poverty, create better product, create better services. These are the things that really, really will move the needle in terms of creating a better way of life for everybody.
I'm just going to jump in and interrupt this episode because I have a really exciting announcement that I can't wait to share with you all. The doors are now open to be able to join my Redesigning the Property Industry mentoring program. I've been running my program since 2024 and I am so proud to say that in that time, I've supported and helped some seriously impressive people to start, grow and scale some of the best property businesses out there. If you're sat there and you're thinking, do you know, I would love to give property a go, but I just don't know where to start. Or you sat there and thinking, okay, I've started, but I'm really unsure about direction and where to go next. I absolutely hear you. Spaces to work with me are always very, very limited. Program starts in July 2024. As part of the program, you'll get to spend some one-to-one time with me monthly. You'll also become part of a very small and intimate group of people that are at a similar stage to you that can really help support, inspire and keep you on track and accountable. Every day you'll have access to me in your pocket, on Slack, in DMs and voice notes. If this sounds like something you might be interested in, then please don't hang about. Head to the link below, give the information a read, or drop me a DM on Insta, 3_Beespace. Let's do this. Let's build the property portfolio that you've always dreamed of together. I can be there to help and support you, guide you with all of my years' experience. So now let's get back to the episode. So let's wrap up on a positive note then. So for next year, number one bit of advice: what should people do? You know, how do they deal with all this information that's been put in front of them from all these big changes? What positive action can they take forward?
In my opinion, it's going to be business first. Even though the landscape has been hit for landlords, for property people in general, I think you've got to think more as property as a business from the outset. If you're going to buy an investment, if you're going to buy a portfolio, if you're going to invest in a portfolio, look at it as a business, look at it as an income producing, run cash flow forecasts, run P&Ls, think about outsourcing some of the management and building a team around it. Think about scaling it potentially as well. Don't just think about, okay, this is just going to be one little house I'm going to have forever. Think about a little bit of a business approach to it. Have that in mind. At the same time, importantly, multiple streams of business income. I think if you're getting squeezed on one thing, the best thing to do is have another stream of income. And so for example, we talked about architects, contractors, planning consultants. You can maybe be getting into property and start investing into deals. Or if you've been doing deals and you're a developer and you've been developing or you've been building a property portfolio and you think, wow, I'm getting squeezed left, right, and center. Now is a good time to start thinking about what business could I start? Because business generally property is famously very, very capital intensive. So maybe you don't have that capital available to you, but to start a business actually could be a much, much more accessible target. And you can make some really, really good returns. I mean, I wouldn't want to encourage too many more brokers into property finance, but the setup costs for property finance to become a finance broker are relatively low. The barriers to entry are relatively low. You have to be really good at what you do. You have to be on point. You have to be knowledgeable. You have to be good with communication. You have to be trustworthy. These are principles and values that we build our finance brokerage on. But if you do business well, I think that there's still a huge opportunity. We still are one of the largest GDP growth economies in the world. So I think the multiple streams of business income, having property as one side of things, and starting a business of some nature on the side, or become the main staple, one way or another, having this mix of two is the way to go forwards.
Amazing. Thank you, Sam. Really appreciate that. I think it's definitely what we've decided to do as well, because obviously we've just launched Builder's Yard, which is now our retail offer. So we're looking for the next site of that, and we're going to build up 6 of those shops. We've got the building business, we've got the digital business, we've got the lettings business, we've got developments, and then we're going into bigger developments as well next year. So we've got different things going on, all related. So for that one core reason, something will work, something will make some money, something will pay the bills, because we've got, fingers in a few different pies, as it were. Will you come back on the podcast so we can talk more about you and more about Merryoaks?
100%. I absolutely love spending time with you, talking everything property and business. And businesses, starting Merryoaks alongside my property portfolio has absolutely helped me. And I think more people should be doing something along those lines. So
congratulations, by the way, on the job you've done with Merryoaks, because I've kind of been there at the different parts as you've done it, and it's been really rewarding to watch you grow that. So well done. Thank you, Sam. Thank you for giving us your honest and open views on the changes and kind of what's going on in the big, bad, wide world. And if anybody wants to find you, how do they do that?
Reach out to me, email me, sam@merryoaks.com. That's probably the best way to get a hold of me.
And obviously it'll be in the show notes below.
Thank you very much.
Cheers, Sam. That's a wrap for another episode of the Beespace Podcast. I've been your host, Jade McNeil, property developer, mentor, and business coach. Don't forget to subscribe on your favourite platforms. And until next time, remember, don't believe the hype and always keep it real.